this close above the breaker here with basically no retracement to me looks pretty bullish. I do want to see how we fill this gap. It's the one I marked out in the daily bias picture. If we can fill this gap and then continue to the upside, reaching to the buy side here, that's preferred. Now, if you take a look at ES, we have no willingness to return lower into the 15-minute gap. This one right here. So you can see we're just extending up quickly. So that would be your SMT I'd be identifying. I do want to see all the bullish order blocks now hold in this section. And then now that we've basically had selling and buying through it, at least on the 1 minute, every single time that we close above a bullish order block, we should see support. And then that will eventually be used as an inversion gap. So let me actually mark this out. This is your 15-minute gap. And we can be waiting for macro time to look for the drawn liquidity, which would be the relative equal highs up here. We have buy side, and then I have one more I wanted to mark out, which is this high over here. Now, excuse me. Since we only have Thursday news, we're anticipating some sort of a Thursday reversal. So we have to be careful with kind of seeing inside week trading back and forth between Monday, Tuesday, and Wednesday. And then Thursday finally brings about a sweep of the weekly highs or low. And then we continue going to Friday close. That doesn't mean that we can't put in a high here. So it's kind of difficult to predict the weekly profile up until about Wednesday. And then once Wednesday hits, it's mostly clear. All right, so we just took out liquidity up there. Now, when indices are misaligned like this, it's best to just wait for the opening range to play out. The first 30 minutes, get a gauge of the market. You can see we're holding this sibi up here actually pretty well. Just wicked into it 3 times. Candle buys closing below, and we're disrespecting the order block already. So I do have this sell side down here marked out too. You could actually see this as a Judah swing. Depends on how strong we react off of this, right? So if you want to see a sweep of stops and a return lower, then preferably we see some sort of inversion gap, form at the top. And if we close below here, I mean, preferably below this low, this would be your market structure shift, right? And I guess your breaker, right? High, low, higher, high. That would be your last down closing candle, or this one too. If we get speed below that, even speed below this, let me actually mark this out really quickly. And that'd be great for further downside movement. Obviously, we got this gap here, discount, and then the relative equal lows down here too are still of interest to me. This would be your 930 model, right? So we've got 930 sweeping stops, nice continuation expansion lower. Now, if we're truly bearish, technically we could enter in here, and if we're looking for discount PD arrays, the dealing range I would be using is from the sell side sweep to the most recent buy side sweep. So here, and if there's no recent buy side sweep, you just use the current high. So from here to here, our PD array in discount would be this one right here. Extend that out, and that would be where I'd be targeting for the day. Obviously, there's some gaps lower too, but at least down into this gap by time of day, so by 10:30 or 11. So if we mark that out really quickly, I believe it was this one, right? Mark this out right underneath the lunch low. So that could be your target for now. We zoom out here. So this kind of retracement leg, we zoom out, that'll be a order block. So we can use that order block paired up with the gap here. Got taking a stab short. Remove some of this stuff now, actually. It's also layered, right? You can further precisely find your entry point. I'm liking it so far. In terms of an order block, the order block, at least on the higher time frames, are slightly above on the bullish end of or in the premium end of this gap. So I do want to see how we react. The 2-minute order block is right here. There's no volume balance that I'm seeing. So I would like to see some sort of low risk entry given the first 5 minutes at least. We have no 10 a.m. news, so obviously if it does just run without us, that's fine too. Week opening gap. Make sure you mark that out. You can see the respect there. I didn't mark out the RTH. Oh, we already filled it. Okay. Actually, I do want to see something. So I don't know if you remember the, by the way, it was ES just crossing their low. If you remember the live stream where I said that the first gap that forms within the opening range is usually pretty strong, that would actually be this gap here. You can see this is above the opening range. If this is your high, this is your low. This is the first gap that forms within that section. Nice shorting opportunity given there. I do actually want to study that a little more. So if you have screenshots or anything you want to add, let me actually make a Q&A post right now, just on the opening range. I'll call it opening range first gap. All right, there. So if you're going to screenshots, you're going to post them there, you can. Yes. Got some speed. I do want to see if this old selling can hold here. That's preferred, obviously, but I do want to see still more speed below this low in here. So we can confirm the breaker. If you go back. Yep, we got SMT at the lows now. To be honest, I don't really like the fact that we're so misaligned. We're so spread apart. We've got ES on the high end, NQ at the low end, and YM is still pumping up here, right? DXY, you got to see what DXY wants to do. So I'll just wait for 10 a.m. I'm going to screenshot this really quickly and say I'm going to wait for 10 a.m. Send to predictions chat really quickly. Yeah, these real typical highs are still pretty juicy to me too. I agree. Whoops. Won't the bisi be the first gap for the opening range? So this bisi right here, if you go to RTH really quickly, that's not RTH. This one that forms is not actually within the opening range. So this is your closing price, and this is your opening price. So if we extend these out, see how this gap now is above opening range. Same thing with this sibi. Then if you drop down, this gap now is within this low and high, right? So let me actually just screenshot this, and then I'll send it over to the Q&A post. That's the first one. So I'm not gonna take a stab short here, not yet. I don't like how ES and everyone's kind of misaligned. Sell side looked too juicy to me at 9:50 to stay out. I like it. Let's grab that really quickly and get out. Is there an order block here? Should trade a little bit further. We can actually extend this gap over here out. Version. Whoops. Let's see how well that's filled and held. If you're going to turn another 20 points lower from there, if you were targeting that. down to basically the wick. Old selling there is holding. I actually do like a movement lower. See if you can scalp 20 out of that. What tech earnings are having today? I actually have no clue. I haven't looked that up in a while. Could also look for that lunch sell side. Where do you post the screenshots? Okay, there's a couple. First of all, welcome. If you have any questions, shoot me a DM. Screenshots are different places. The macro screenshots are in macro review. We've got Q&A posts. Both basically have everything else. So different concept ideas, different strategies, all that can be found within there. And then everything else in predictions intraday. So if you still want to look for sell side, I'm still looking at that 15-minute gap lower. About to reach the 20 actually. And you can see we're not respecting the CISD point at all. So I would like to see expansion at least till 10 a.m. So we can use 10 a.m. as kind of our exit tool right here. You can see when we have a large gap like this, you always want to be using, at least for me, I always want to be using some sort of secondary reference point. So in this case, there's no order block that's here. We do have this wick technically we were tapping into. I don't really like using these low probability order block candles though. I like to use preferably like a larger candle like we saw earlier. But this IFEG, if you extend that out, you can see the nice respect all the way up to the premium end that was not filled. Right, we're tapping into it again, filling it efficiently with buying, and then we eventually come back down. Same thing here. We want to see this IFEG actually hold price lower. And I think that's your 20 points, right? Looks like YM earnings in non-tech sectors performing well in earnings, but tech earnings are tanking. Yeah, I'm not really sure the fundamentals on that either. Nice. I like the short. Looks good to me. Took 5 points in ES, 1 minute bearish fair value gap. Nice. Love it. Yeah, you can see that old selling right off that breaker too, the fair value gap in here. And the wick lower actually. You can see here we're actually referencing this last up closing candle. The wick actually there. So we close below it. I would like to see expansion with this last leg. At least till 10 a.m. I want to see that low taken out. I don't like the fact that we keep on trading up here though. Tapping into the IFEG one last time. I feel like this 15-minute gap is a good target. I don't know how far away this is from the lows. 6 points. Okay. All right, if we close below this up closing candle, look for speed. Got no more imbalances I'd like to see filled. And there you go. So I took a nice, well, watch for this gap too, but nice 20 points from there, at least 30 points probably now. Nice, fantastic. There's your gap. Let me get a full screenshot of this really quickly, and then I'll send it over. I took a little demo stab short there on the other screen. I do like to just take the trades that I think are highest probability on this screen, or just any ideas that I want to show you play out. So the reason sometimes I don't take it on this one on demo is just because when we have indices like this that are misaligned, it's not a very clear macro and a little more difficult to spot. I don't want to showcase the harder trades because it'll probably confuse the newer people. I want to show the most textbook A-B classification entries if you're familiar with the PDF. But screenshot is sent to predictions chat. If you want to look at my entry, I just entered one contract off of the IFBG tab. Took it off with the swing low down here. I could be aiming for this gap too, but I just took my nice, like 24 points or so. So I can't complain about that. You can see right at 10 o'clock, made that low. So now we can really just be waiting for rest of silver bullet or just, anything after that. Let's take a look. So we do have this SMT now, and we're probably tapping into the 15-minute gap that I marked out or did not mark out. Where's the 15-minute gap? There we go. Here's your 15-minute gap. So don't know now if this gap wants to be filled and we return higher on ES. We do have to watch for the SMT. And NQ left those relative equal highs too. Yep, can't forget about that. Now, with this large gap though, now the reason I'm fine with these relative equal highs being left is because we had SMT, right? If you look at ES, we pierced it clearly, the London high and the previous session lunch high, which is actually this buy side here. If I move it lower. Right here. Actually, this is another PM session high, but that's the reason I'm fine with leaving these relative equal highs for the rest of the morning. Then if you look at the this 5-minute gap, there's this 2-minute gap that's forming. We have to be careful to see if we want to trade back into that. We have a low, high, lower, low, right? So that would be your breaker if we were to trade back up into this down closing candle here. So it's good to just keep that in mind. I'm gonna actually minimize this. And if you take a look at here, I'll send you this picture at the SMT at the lows right now too. That's between NQ and ES right now. And you can see DXY is really failing to climb higher. So if this gap here holds and we continue to move lower on DXY, then look for indices to put in a low, and then we continue up. Now, if we're using time here, I do actually like the fact that we have original consolidation. We have, first stage, second stage, smart money reversal, market maker buy model. It is a kind of a sharp market maker buy model though. Now, if you want kind of like not a tip, but something to look for when you're looking at market maker models, buy models or sell models, they're always going to be somewhat symmetrical, right? The perfect ones are going to be perfectly symmetrical, where your sell side curve is just as steep and just as time consuming as your buy side of the curve, right? Something like this. Now, when one side is steeper than the other, that typically means that there's going to be some sort of delay in us climbing up. So if there's a very steep kind of, drop, maybe one side is like this, where it's steep quickly, and it's not like a very, something like this, then you can expect when we trade back up for the buy side, it's going to be a little bit more high resistance, possibly. Taking a little bit longer than this one. Now, same thing goes with the flip side. If this is taking a very, very long time and there's few gaps that form as a process, then we're going to have a low resistance liquidity run up to the highs. That's just kind of a high resistance to low resistance, right? But watch this as in version 2, actually. But you'd be anticipating some sort of low resistance up until this high here, and then possibly retracing the stops, just because this is where your market structure shift happened, right? Price will be low resistance up until market structure shifts, and then go into high resistance and then sweep the buy side or reverse. So if you go to the higher time frames, you can see this clearly on almost any single time frame. Whenever you have a market structure shift point, that's going to be the point where there's very high resistance. You can see here, market structure shift point here, the swing low, trades through it, low resistance up into there, and then reverses. Trying to find an example where it just turns into high resistance. Here's your market structure shift point here. Right, we broke the low. It was originally bullish, respecting all the lows, low, low, breaks below it. Extend this out, trades up into the low resistance point very clearly, right? Nice Judah swing lower, expands up, and then we chop around. Then we fly up to the buy side, right? This is a good study point if you're looking for something. It's best to trade. This is why when you're going long, it's best to trade or take those stab longs when you're in discount. You don't want to be trading this far in premium because it could actually reverse off the low resistance point. Obviously, if we have some confirmation that we're trading up, then you can still take longs in premium if you want to scalp it. But up until really this low resistance point, it becomes difficult to predict with high probability. Same thing here. We don't actually have a swing high or anything here. Anyways, let's go back. So now it looks like we're starting to consolidate at the external range. Gotta be careful here. Well, it looks like our bisi was completely slammed through. This is our next gap in discount. We have this gap below market price, as well as these swing lows. So 15-minute gap, about a print, 7 minutes here. 5 minute, we want to see how this is used as inversion or not. I prefer like to see a retracement. Thinking previous day low as target since we failed to displace above previous day high. Let's take a look at previous day low. I think it's a target for the rest of the day. I need to see how ES starts to react off this gap that we're trading in right now. If we obviously fail to, which I don't anticipate us failing in this gap, I'd like to see this sell side taken out. So I don't know if the AM session will actually create this low all the way down here. It's a good 83 points still. It's not impossible, but preferably what we see is maybe we trade into this gap here, take out some buy stops during lunch, and then we trade back lower into the sell side. That's what I could see. That'd probably be your highest probability. So starting the retracement. Can actually mark out the macro highs and lows if you want. So it'd be up here, right next to this gap that's left unfilled. This has my attention. Could 1 minute 6:59 sibi be a valid silver bullet short? I must be looking. Oh, 9:59. This one right here. I mean, technically, no, because it's outside the window, right? They're very specific windows. So technically, yeah, that's not your silver bullet. That's your macro trade. Silver bullet, if you're looking at it, it could be this gap here if you're anticipating further displacement. Or if we reverse here, going into 1030-ish, then we could see that tracing back up. But we're expecting expansion down at least until 1030. So you can use time as the exit. But this is why when you get comfortable with learning time, you can get more relaxed when you're holding longer runs. Because all right, in a bear scenario, we just swept out buy side. We have SMT here with ES, and we're trading back lower. We got a macro entry short. We're anticipating some sort of expansion at least till 1030 or 11, best case scenario. So if you manage to grab a short up here, or if you manage to grab a short here, we're not expecting, if 10 o'clock doesn't create that low, if 10 o'clock doesn't reverse in some sense, like we're not reversing here, we're trading all the way through this gap, you can be very, very confident that we're going to continue at least the 20 points or at least down to whatever sell side target you have. Now, if you go back and study these, low put in 1045. Here we're reversing at 9 o'clock, but the high put in at 11. Now, when I say 1030 or 11, you can actually get continuation into lunch. The reason being, this is a Friday. We also have NFP, so the sweep of sell side down here is expected. Then that's where we tagged long, I think, right, a couple times trading into lunch session. But here we have low put in at 11 o'clock Thursday, 1030. Here we have continuation to lunch, 11 a.m. taking on sell side. High put in 1045. High put in here 1030. High put in here 1045. Right, so we continue to do this. This is a Tuesday. Didn't actually get this pretty poor price action actually. So, January, but taking a buy side, sell side, and then we continue to lunch. So that's the one we have not seen yet. 1045, putting the low there, expands up into lunch. We can see the high taken out with these relative equal highs right at 11 o'clock. So we continue to do this over and over and over again. It's not random, right? So here, this is an example of a 10 a.m. reversal. Also because we didn't have a super stops at 8:30, didn't have a super stops at 9:30, so we're expecting 10 a.m. to bring about the reversal, right? So here we're trading up and we go back into premium, but this is a little bit difficult to capture. Here, high put in 11 or 1045. So this is why time is very, very important, right? You have a gap here lined up with this order block too. Do actually want to go back. So we're outside of time window here, right? We're outside of macro time. So for me, I'm going to be waiting for 1030. But if you're looking for silver bullet, you could probably find a short setup somewhere in there. Oh, that's really a trade from yesterday. Oh, RTH. So no RTH gap there. Here we've got, here's your low. So I guess this would be your first gap, right? Nothing in there. Yeah, it is difficult to tell. I feel like you need clean price action. There's got to be different rules to actually look for using that gap. Just tap the discount on there. Yes, hunting for their sell side too. Most likely we leave this open as breakaway gap. Don't want to see that filled, and we just hunt for sell side quickly after. tapped into it. Well, we just filled it completely. Never mind. So preferably this has got to be pretty strong because we have an order block tapped into right here. But we had consolidation. We left a higher time frame point of interest, this 15-minute gap, right? So you want to see some sort of 1-minute breakaway form. So since we're not filling since we're filling this all the way, we've got to be careful. I'd like to see another breakaway gap form at least if we want to trade lower into 1030. Let's see what NQ is doing. You can see NQ is trading through this gap here with the order block. So we're disrespecting the breakaway gap we wanted to see left open. We're trading up now through this here. Now this to me almost looks like, take this. We're not going to return it to premium. I have a hard time believing we're going to return it to premium. If we do return to premium here and take out this buy side, then you could be looking for continuation into 11. If we just trade up into maybe like this gap here, then you could be looking for a 1020 reversal and then continuation entry with a market maker sell model here. Continuation entry given at 1030, 1045, then we put in the low. So I'm still looking for shorting opportunities. Let me type that up really quickly. See the order block, this gap isn't forming either. So if we actually take this high to low, it's easier for me to understand if we were traced back up into here, into premium of this ES. You can see we left the relative equal lows, didn't take out the sell side yet. Probably gonna sweep out some buy side, tap into a gap. And then reverse. But if we take this dealing range, we'd be in premium. Sweeping out turn range buy side here. Yeah, we need some sort of liquidity. So we're taking these highs out. If technically this is not in premium. No, I don't really like pulling from this dealing range, but this is, I guess, balanced. So if you were to take it from here, you want to see this high pierced or even this high, right? That's some sort of liquidity in premium. If we were to take it from here, you can see that these highs are not actually in premium. So if we were to trade up into this gap multiple different times, you would actually like to see the consolidation or at least a spike and a wick above these highs that are formed possibly into this order block here. And then we continue to sell off. We're still outside time, so I'm not going to short this right now, but just watch for that kind of spike above. We're holding this gap so far. We have a breaker right here, order block. Put an alert right at 50% there on the ES dealing range. Let's see what. All right, so we're tracing back into the 5-minute gap there. On NQ, let's go actually to the 15-minute gap also. We've got the, so look, if we take this breaker and extend it out, this is your 15-minute order block right here. So this, it's kind of a lot of lines on the chart, I'm not gonna lie. This right here is where you'd be looking for the point of reference, the higher time frame for us to tap into, which we could be taking out this high, right? So we didn't take out the high yet. I'm just watching this. I'd like to, oh, we did take it out. See, we just took this out barely by 1 tick, reversing now. With a low at 17,671, make the 15-minute bearish fair value gap a breakaway gap. 17. Oh, 15-minute gap. Yeah, I preferably we don't see, like on a higher time frame bias, we have SMT at the highs and we're displacing through a breaker. So this breaker is really where you'd like to see it tap into. You don't really want to see a trade above that. So yeah, preferably we just see this kind of used as a breakaway gap. I don't know yet if we want to actually use it as a breakaway gap. Preferably we would see some sort of, so we see how we're consolidating here. Consolidated, took out the high, and that's actually now in premium of the dealing range. So whenever you have your retracement leg and you want to see so much sort of sell off after that, there needs to be a buy stop run for us to continue the move lower. Okay, there can be two different buy stop runs. There can be something like this, where we have a dealing range and it reverses quickly like that, right? So this is if you're trading a market maker sell model or any sort of market maker model, this liquidity, there needs to be a liquidity hunt. This is why I said yesterday, if you're forming a model, you have to have some sort of a buy stop or sell stop run for us to reverse and go in the other direction. So in this case, if we're trading this market maker sell model, we have a buy stop pool in premium. We take that out and then continue lower. If we don't have a buy stop pool in premium, something like this maybe, or we just don't have a swing high that's formed, it's just maybe a continuation like this. We'll then see consolidation most times going into in premium. So we're building buy stops above. Then we have a Judah swing at a time specific event. Judah swing above. Then we trade lower into this. So we're taking out still buy stop pool, but there's different variations that the algorithm will utilize. So in this case, we take this dealing range from high to low. This is the second variation, right? We don't have from this high to this low. There's no really swing high besides this one that's just pretty far on premium. But there's nothing right at that 50% line. There's no swing high here that's formed. We have a swing high here, but that's in discount still. So what we see is consolidation, sweeps out buy side, right there, and then continues lower. Waiting for it to go to the 1 hour IFPG to take a short. Right up here. I like that. Yeah, let's see if we can have one last pierce above this. We also do have to be careful. We have a breaker here with this gap. So if price is respecting that, then we can see bullish movement. If we do close, like this already is a closure at mean threshold of this order block range. So we got to be careful. But I'm still preferring shorts in this scenario. I'm not going to take a stab long probably until 1050. If 1050 reverses or we have a reversal here. But you can see we're trading all the way through the breaker low end. So that to me already confirms our bearish, our shorting idea. But once again, we're waiting for time, right? Between 10 o'clock, here's 10:10, you put in that low right at the macro end, tapping into a discount PD array. Then we trade up between 10 o'clock or 10:10 and 10:30. We're kind of setting up for another trade idea. If ICT posts a silver bullet trade today, I'm assuming it's going to be a short off this high. Or it's going to be something we're about to take right now. So now you can see we're setting up for the market maker sell model I was telling you about. I mean, if we take this low out, which probably will. But this is exactly what I told you was going to happen, right? Consolidation up here. We didn't have any high in premium. Take it out one last time. There's your buy stop run. Right there. And may sell off. No entry given, true, but if you were to use that buy stop hunt. And there is the low all the way smash through. And if you didn't get your entry, we're not chasing price, right? You don't see me shorting this, even though we had a bearish idea, and that bearish idea was right, I'm not going to just take a stab short outside of time, outside of an entry point, even though I was right. Which that's very difficult, I think, for most people to do, myself given. Like, a lot of times you want to be right, which you could be right in the market and still not take a trade, which is difficult to do. It's a very hard psychological thing. I have a fundamental question. Most of the SMT ICT traders talk about algo and banks manipulating the retail stops. How come all the banks and institutions use the same levels and algos? Your thoughts? It's a good question. Let me get back to that really quickly. Okay, I'm okay as long as it doesn't take out the 1 hour swing low before the PM low. Right here. Oh, this one right here. So left us behind, fortunately, so I'm done. Have a good one, everyone. See y'all tomorrow. See you, my man. Good stuff today. I like the trade. Back at it tomorrow. On ES, you created equal highs, just fall short of that 15-minute sibi. Oh, ES. Just barely. So reference point, we got the gap here. We need another reference point. We got the bearish order block up here, as well as a tiny VI as well. So we're filling this gap for 3 minutes before. Why I'm using the IFVG to go higher. Yeah, now we got to be careful, right? This, to me, looks like a validated unicorn setup, but we're not taking stops. Controversial PM short, I like it. That's what I was anticipating. We can get some sort of super buy size when we tap into this gap, create a low risk opportunity and lunge, then we continue for sell stops down there. That'd be nice. So got 10:30 approaching. You have this gap here now efficiently filled with buying and selling. This gap here only has selling worked through. So if we're using the 2 reference points, we got this gap we're trading into. We do actually have old selling here. So watch what the candle buys print. I'm not going to use full leverage on this one. I'm going to drop down the micros. So Jays, I'll answer your question after this 10:30 macro. I just want to see it play out, and then I'll give you my thoughts, because there's a lot of stuff to cover there. Flux, is this the sibi I meant when I said, oh, this is the sibi I meant when I said 959. So in hindsight, now is this a valid silver bullet short? Oh, 959. Oh, this one right here. I see. Yeah, if you were looking at, anticipating short setups, that's what I said. If I see what's supposed to trade setup, I assumed it was something like this. I think, if you're trading silver bullet, this is a perfect short setup. We've got everything we need, right? We're tracing into parent dealing range premium there, knocking out the short-term buy stops, trading into a gap that was already printed, and we had further downside targets. I think that's a great short setup. For me, personally, not my model, but if you're trading silver bullet, I think that's fantastic. So yeah, screenshot that, add that to the model, whatever you do. So here's 10:30. I'm liking the fact that we're respecting the old selling there. Preferably we leave the upper gap as breakaway. This one left open as breakaway gap. And we can just sell off right now. At least taking out the AM low. Which would still be, let's see. Took a stab short here. 25 points. This IVG right here from this this right here. Yes, pumping up for their order block. Tap the order block right there. Let's see now. Feel comfortable taking a tiny stab short here. At the high end of the breakaway gap. Preferably we don't see that filled into. Take profit at the low. Let's see how it plays out. And if you want a really safe stop, you could be putting it right at the high end of this breakaway. Let me screenshot this really quickly, send it to predictions chat. I shut off that 1 minute IPG. This one right here, I like it. Let's see what those candle buys are printing. So we've got the context of this low being put in at 10:25, which is outside of the kind of window we're looking at, right between 10:30 and 11 o'clock. We've got still sell side that needs to be pierced on ES. We've filled this gap. We're tapping to the bearish order block, which this kind of retracement to me is a little bit higher than I'd want. But we still have sell side draw. Slight SMT between ES and NQ. Let's take a look at YM quickly. YM traded up, of course. And DXY we need to see start to climb. If DXY fails to climb, we start moving lower. I'll probably close it out before the stop is hit. But let's see if it wants to play out. So this is our draw for now. Now the only problem I think I have with this trade is the fact that we put in this low and we're actually within a discount sibi. So if we're looking at this gap, this is already within discount of dealing range, which should technically be your target for the morning. Is a what's it called? Is a discount sibi in 15-minute or the 60-minute. So that's the only reason that's like, it's kind of a major reason, but I'm anticipating time to put in the low instead. Just took the lows from yesterday's equal lows at 11:20 on the RTH chart. Just does one ignore this point of view? Let's take a look. These are all typical lows. I'm not ignoring it, more of just, I mean, we could be wrong, which I'm fine with being wrong, but we could just be like bouncing off. But like I said, this 15-minute gap, we already filled it. I just don't like the fact that we're retracing now prior to the time window. Anyways, probably get stopped out here. We're trading up to the breakaway gap pretty far. So for me, that already kind of nullifies the trade idea. If we look at ES, we're trading up above that gap. So let me actually close this out now. That's not close. And DXY, let's see. DXY is barely moving there. ES has relative equal highs on the 2, 3, 4, and 5. Oh, this is RTH. Yeah, these ones right here with the gap. So it is what it is. I'll send this trade setup as well to Prediction Chat 1 and 1 on the day. That'll probably do it for me for the trading. It is what it is. But I feel like the analysis for me is a pretty textbook trade idea. The only reason It's slightly off is because we already took out this low. So if we hadn't confirmed the market maker sell model, maybe looking at taking out that low there. But I'm fine with taking that loss. I think it's a trade I would take almost any other day. Model is great. Controlling loss is the most important. That's true. Yeah, my model might be different from yours. You could look at that taking short. You could have longed off this gap, whatever it may be. But just make sure you're managing yourself properly. We do have a breaker in here. If you want to look at using that, but I don't like taking longs, like I said, until 1050. So if you're looking at 1050, then that would be your next window, kill zone window. I'm done with this one. I could be looking at that. But Jays, if you're still here to answer your question, they don't manipulate stops. They don't manipulate retail stops. Instead, they know where liquidity is hunting. In order to fill a large amount of orders, there has to be offside distribution. Fancy words for if you've got a whole lot of orders and you need to be able to fill those orders, like millions of dollars worth of limit orders, there has to be some sort of offset distribution where the algorithm is hunting liquidity where it knows it's going to be resting there. So it doesn't necessarily know where your stop is. It just knows where there's going to be a lot of strength. It could know where your stop is. I'm not 100% sure, but it's going to hunt for those levels to exchange with willing buyers and willing sellers for the banks to offset or to load onto their positions, and then reverse price. So price can then eventually hunt for the buy stops or whatever the opposing liquidity is to dump off their sells. It's always going to be in the form, not always, but 80% of the time it's going to be in the form of a market maker model, because that's what's preferred. You can actually see the scaling in, and then the swarm reversal. And then every single time we see those longs going to profit, that's your old buying. We're not going to see those typically dip lower. There's a whole, if you want the whole thing, shoot me a DM after. There's actually an algorithm, or not an algorithm. There's a PDF that was released by the Bank of International Settlements. I want to say probably back in like 2020. And it doesn't explicitly say what the algorithm does or the coding or anything, but it shows you how it works in a sense of what the banks are doing, how they're getting their positions, how there's legitimate, there's terms in there that you're familiar with. There's terms in the PDF called, market makers. There's algorithm that's used. There's all those kind of different things. It's about 80 pages long. So if you're interested in that, you can shoot me a DM. But it's all a bunch of tinfoil hat stuff. If you are not interested in it, if you are interested in it, then you realize, all right, these banks are scamming everyone, and that's how they print their money. But at least I think my own opinion is I'm glad that it's algorithmically delivered over just retail buying and selling, because at least now we can precisely know exactly what's going to happen. Although it might be harder to learn and requires a lot of time and patience to be put into it to actually fully understand it, I think that the level of precision and the ability that we can time the market every single day, take the same kind of macro trades every single day, for me is almost kind of a weight off my shoulder, because you actually know what's going on. If you traded retail concepts before this, or if you still trade retail concepts, or even if you're not familiar with ICT concept to an extent of you even know what's going on, it almost looks like you're just reacting to whatever's going on here. Right? Whatever this candle's printing, you're going to be reacting off this most recent 1 minute candle or the 5 minute candle. But ICT concepts, I think, is the only kind of concept or the only kind of trading idea to me that makes sense, where you can every single day look at time and price, and the same things will happen like clockwork every single day. So that's my personal opinion, but that was a solid 1030 trade. As I was thinking, it was the second stage of distribution. Yeah, I still liked it. I think that was a nice, I'm not too mad about it, to be honest. Came up, trade up into the sibi again, which is kind of weird, right? Lime's doing its own thing. We have a buy side sweep right there at right up into this gap, into the 15-minute gap as well, I assume, right? Right in there. This to me is pretty wonky, right? Almost like search and destroy, seek and destroy, whatever it's called. Still looking for that AM or the opening range model, right? So between 10:30 and 12, we want to see the AM high or low pierced. I still assume it's the low because we're bearish. It is just kind of weird that we haven't even really pierced this high. Like this high is still left untapped. Trading into this gap here, this tiny sibi here. So we'll see. This is still my target for the day, but if we don't reach it, that's fine. So I think we'll go ahead and wrap it up there. If you've got any questions or comments or backtesting data that you request, shoot me a DM. Be more than happy to help you out. If there's anything that I missed, or if you have any screenshots or if you're going to backtest the opening range first gap thing today, feel free to post that in the Q&A post. All those Q&A posts, by the way, are open. So if you have any questions or if you have anything on a specific topic that you want more insight on, you can just post it right on any of those. And either someone else in this group or I can respond to you and hopefully get what you're looking for. But till I see you guys tomorrow, Lord willing, have a great rest of your day. Enjoy your Tuesday afternoon, and I will see you guys then. Peace.